Welcome back to Daily Digests for Friday, August 7th, 2026. The U.S. labor market suffered a sudden and unexpected setback in July as nonfarm payrolls contracted by 23,000 jobs. This marks the first negative headline employment print in years, sharply missing economists' expectations for a modest 80,000 gain and forcing an immediate repricing across equity, fixed income, and currency markets. Looking into the detailed Bureau of Labor Statistics breakdown, the July employment decline was led by a 50,000 job contraction in local government education, alongside notable losses in retail trade and hospitality. Compounding the headline shock, previous monthly payroll figures were heavily revised downward, with May and June data combined being slashed by 103,000 jobs, erasing earlier assumptions of labor market resilience. Although the official unemployment rate edged down to 4.1% from 4.2% in June, underlying metrics reveal that this decrease was highly deceptive. Over 264,000 individuals dropped out of the labor force entirely during July, pushing the labor force participation rate down to 61.4%, its lowest point since early 2021, and highlighting mounting structural strain on household employment. This rapid cooling in employment immediately reshaped Federal Reserve interest rate expectations. Futures traders quickly unwound hawkish bets, dropping the market-implied probability of a September Fed rate hike from 58% down to 41.9%. Lower Treasury yields triggered a bad news is good news buying surge in mega-cap technology equities, while spot gold prices surged as investors priced in monetary policy easing. Shifting from macro policy to mega-cap technology investments, SpaceX and Tesla officially confirmed plans for Terafab, a massive semiconductor manufacturing complex in Grimes County, Texas. The initial construction phase requires a $16.8 billion capital investment, spanning over 100 million square feet, to establish one of the largest vertically integrated chip fabrication facilities in North America. The primary objective of the Terafab complex is to supply over 1 terawatt of annual AI compute capacity across Elon Musk's industrial ecosystem. Custom logic and memory chips produced at the plant will power Tesla's Optimus humanoid robots and Cybercab autonomous vehicle fleets, while providing SpaceX with specialized high-performance processors for planned orbital space-based data centers. In U.S. infrastructure and core equities, Construction Partners reported outstanding third-quarter 2026 financial results. Driven by robust highway and civil construction demand across the Sunbelt, net revenue surged 28% year-over-year to $1.77 billion, prompting management to raise full-year 2026 revenue guidance to $3.66 billion and sending shares significantly higher. Highlighting its multi-year compounding roadmap towards $6 billion in revenue by fiscal 2030, Construction Partners announced the strategic acquisition of Ellsworth Construction. This expansion strengthens the company's footprint across Oklahoma and North Texas, while diversifying traditional road building into high-margin data center site preparation and commercial infrastructure projects. In digital advertising, demand trends showed sharp bifurcation as the trade desk suffered a 20% stock decline post-earnings. Despite broader digital ad spending growth, the demand-side platform guided third-quarter revenue to $650 million, representing a 12% year-over-year contraction from $740 million in the prior year period. Addressing the operational crisis, Chief Executive Officer Jeff Green initiated a total executive suite overhaul, replacing the Chief Operating Officer, Chief Financial Officer, and Chief Commercial Officer. Management acknowledged that internal execution bottlenecks and an audit dispute with major agency Publicis, representing 10 to 20% of billings, contributed to recent customer attrition and revenue deceleration. In AI hardware infrastructure, Supermicro continues to contend with regulatory probes regarding export compliance and accounting practices, creating valuation overhangs for the server manufacturer. Simultaneously, cloud infrastructure developers face growing bipartisan local opposition and power grid bottlenecks in regions like New Jersey, signaling that non-market constraints are slowing physical data center deployment. From a broader asset allocation perspective, current market price action demonstrates a widening K-shaped divergence between capital efficiency and labor well-being. Accelerated AI adoption and aggressive corporate cost controls allow asset-light technology and infrastructure leaders to expand cash flows and margins even as broader labor market hiring stagnates. Heading into mid-August trading, market participants face a delicate balancing act between supportive rate cut expectations and broader growth uncertainties. While lower discount rates provide an immediate valuation cushion for growth stocks, investors should maintain strict risk discipline around key index support levels, as upcoming consumer price index releases will clarify whether the Fed can execute a soft landing.